Hello, everybody. I'm Jason, the Wizard of Ops. With me, as always, is Jay, aka Dark Matter. But also, special guest today is Andrew. I guess I already said your name. Sorry, bro.
It's fine. It's fine.
Ingram. Ingram is our earnings specialist, and this week we have quite a few earnings. So, gents, how was your weekend?
Amazing for me. Besides the almost, I think we got officially over a feet of snow, maybe a little bit north of that, right? So besides the ice that is outside, it's great. Awesome time, Wiz.
I'm actually happy to see you here because I had fully suspected that your power would be out. But
I thought so too. We
but
made it.
for us though, for Ingram, that's flurries, right? It's
Yep.
flurries.
It's only 1 inch. I'm surprised. Not much snow on our end.
All right. So let's get to it because we've got a lot of content today. First, we will go through Jay's trade plan. And when Jay gets to earnings, we will skip it and we will talk about earnings with Ingram. So, Jay, take it away. What do you see?
Yeah, definitely. Let's jump right in. So, going to skip the earnings, but if you really wanted to see it, here's just an overview of this week's earnings. Lots of major players out there, and the market will be very volatile as well. But if we take a look at the event catalysts, our schedule economic calendars of events, we do have quite a bit here as well, Wiz. There's these calendars now have Trump's schedule as well, just FYI. So that's an improvement, actually. So he does speak tomorrow. What he's speaking on, I have no clue, but just that's a call out there. But this week's big event catalyst that is planned is the FOMC, where we will hear from Powell and his friends at the Federal Reserve on what they will be doing with the interest rate, most likely not cutting it. That's the prediction here, or the forecast for a lot of people, but that is going to be an event catalyst. And then at the end of the week, we also have our PPI as well. Anything you want to add, Wiz, in terms of this week's event catalyst?
Yeah, usually on the overall market, earnings tend not to be too volatile, but when you have FOMC on top of it, that could get kind of scary. And that's the other thing too about Andrew's work that he's about to show us. Is it always has to be kind of held in the back of your mind that FOMC is happening right before those, three big earnings. So it's going to be a difficult trade to handle those earnings if FOMC does something odd or whatever. Yeah, so it's good luck.
Good luck. Wish you well in your endeavors.
You gotta like throw on a trade like right before the Wednesday close, and yeah, it's like, oh.
Well, speaking of that, because of this volatility, we finally cracked the options weekly expected move for this week is north of 100 points. So we've been teetering just shy of about 80, 85 points typically over the past few weeks. This week, we are at 118 points. So if you just want to kind of consider your top and bottom ranges there, that puts you at about 7,021 on the SPX and roughly about 6,785 on the lower end. So quite a bit of a range. And so expect a lot of up and down here is what that volatility is suggesting. But yeah, let's jump in, go into the actual plan here for the week. Let me exit out of this. Boom. Okay. So on the week was it's funny, 6850 was the critical level, right? If you were looking at Volland and all of our key Greeks in there, and the market opened on a gap down last night in futures action, and it hit that level hard. It hit it hard, and we deliver a bounce. And the other pivot there was around 68.85 as well, where, intraday or overnight, I should say, we kind of called for that level to be our guidance for the rest of the session here. So we overtook 68.85. That hit, immediately drove us up to 6,900. Massive positive gamma at 6,900, attracting the dealers, and kind of a magnet and a pivot there. And then we are essentially charging towards that 69.20.25 XPX level here. And this is all before the markets have opened. We've essentially, traversed essentially 75 points since last night's overnight session lows. So what I'm kind of looking on, and unless the data tells me otherwise, and it's changed significantly here, 6,900 seems to be like a dealer kind of magnet point, right? Based on some of the gamma and Vanna levels that we've seen there. So for me, that's what I will continue to look at throughout the week. And if that changes, so as we push above 6,900, don't be shocked if you find sellers above there is kind of what I'm seeing. And we still are pretty supportive here. 68.50 is that lower range, but if you want to bring the sellers back, you got to crack that 68.85 SPX level as well. So that's what I'm kind of looking for. My main levels. Wiz, I'm going to go over into Volland here now. You want to give any of your feedback, please?
Actually, I do want to give one piece of feedback. Trump is speaking tomorrow in Iowa, and it's about the economy and energy, and it's mainly because there's a contentious governor race out there, which actually is shocking because Iowa is usually pretty dead set red, right? And
yeah,
if it's competitive, that's that might tell you something. So
I would not want to be a GOP consultant for the midterms. Let me just put it at
right. Yeah. But other than that, I mean, I was listening also. 68.75 is like where that hill starts. I think we could get down as far as 68.50, but there's quite a bit of support there. However, like we said, there's, this FOMC, and there's there's geopolitical risks in Japan as well. So there was a rate check on Friday for yen dollar to the Fed from the Treasury. So I mean, that's a scary. It's not scary, but there could be some currency moves here, and Besant was known to be a currency trader. So I think this is where this is not a time to be complacent, even though recent market action has been very range bound. I think this is not on a swing basis, especially. It's time to cut bait if you pretty quickly.
Yeah, I think for me as just an intraday trader, I think I've said this for weeks now, Wiz. I don't want to be like a broken record, and Jill made a fancy short of it on YouTube as well. Level to levels, right? And I wouldn't be like, you're going to come in one day with a gap down and a gap up of a 50 points potentially, right? And that's going to be normal. We talked about this a lot before the beginning of the new year, right? A very volatile market trying to find its way, right? So I'm 100% with you. I wouldn't be shocked if you get a lot of that going on. If you notice this box we've been in, if you go to your charts and look at it, we've been in this box since November, right? We haven't left this area, and we keep treading in it. So I'm with you. It's great if you're just a level-to-level trader. It sucks if you're a breakout, extension, trending kind of trader. You're just not going to find that right now.
Yeah. Well, from a swing basis, I mean, it's been great for, like, if you're one of those income traders, so to speak, which is short gamma every month. Yeah. These past couple months have been a Merry Christmas for you. But yeah, the other thing too we have is the vol event signal is at 69.40. So that I think that could get satisfied, if not today, probably this week at some point. That first real resistance right there is 69.50. So we're almost there already.
I mean, it was a pretty robust rally overnight. I mean, just watching the dealers come out buying at the lows, it was just beautiful watching this in Volland. So
well, my question is, why did it open? Why did it gap down 50 points? Was that a Minneapolis thing or?
No, I mean, no, I don't believe so. at least what I could piece together, some of it was the concerns of the BOJ, right?
Yeah.
And some of the policy making changes there. I think it got hushed a little bit, right? Overnight, but clearly that is something to be of concern if you are a trader here, because if you come to that wall, that's going to be a sharp drop if something negative comes out of that event.
Mm-hmm. Okay.
All right, that's it on my end. So once again, we've got our levels and everything we're kind of looking for here in the Discord. And as the data adjusts, which there will be quite a bit of adjustments this week here with earnings and FOMC. So be sharp. And definitely, if you're intraday trading with, I'll keep saying it, level to level trading, that is going to be your best R&R.
Yeah. One thing I did want to say is this week, yes, we have this big support. I think, though, that if you look at through February OPEX, this support that we see this week goes away, right? And there's all of a sudden we become strongly negative VANA both on the weekly and the monthly. So that's kind of also why I say, if you're swing trading and you're on the overall markets, SPX, just be ready because we could fall after this week. All right, so let's talk earnings. We got 4 big earnings, 4 out of the Mag 7, right? That's more than half of them. Andrew, let's see what you got.
Sure.
Which ones are we going to go? Which ones are we going to go through first?
Let's do Meta, alphabetical
All right.
order then. So you guys see my screen?
Yes, we do. We see
So
ORATS.
this is ORATS. I use ORATS to do like fundamental analysis on the earnings place. Then I go to Volland to see what the daily positioning is. So looking at the data, it looks like Meta has an implied volatility of 40.8, which is a little bit on the high end for me. And then if you look on the EPS, it's actually higher by 1.40. So it's like kind of bullish. They're expecting the earnings this one is. What's interesting to me is the implied earn move is 5.6. The average is 7.4. So it seems like people are betting that there's not much movement compared to averages of the previous earnings. And the revisions are actually a little bit negative, more than positive. So for me, I'm leaning a little bearish from the fundamentals. And the range is around 622 to 695.
All right.
So let me look at Volland now.
Yeah, it looks like the past two quarters there, we've exceeded the expected range. So it's kind of interesting that the expected range has shrunk despite the fact that we've had more volatility.
Yep. And what's also interesting is that I always think that Meta tends to break out, but if you look at the past 12 earnings, if you look on the ORATS, it seems to be like 50-50.
Yeah.
So,
well, what's interesting with Meta too, that I'm going to be curious what Zuck will say here is just their capital, their CapEx spending, right? At the one thing with I think that the market is looking for with Meta is that are they going to curb their spending? And regardless of their earnings, potentially, if they stop some of their CapEx spending that they are just throwing like wild, I think that might be a little bit of a bullish trigger as well. So just something to keep in mind.
Is Meta a front runner in the AI race, or are they just kind of?
I mean, they have their own language model called Llama. They've been buying Manus, if you know Manus AI. So, I mean, what they have is the social graph, right? Between Facebook and Instagram, like their AI model can incorporate a lot of the social graph. In terms of like, is it going to go code for you like Claude is potentially? I don't think they're in that space quite yet.
Okay. Interesting. All right.
So let me go to Volland now. So for now, my earnings analysis using Volland, I actually added this new widget, the Catalyst Impact, because I like the way it tells me the hedging. I use it more like an amplifier or the magnitude of the move. So right now it's showing it's like weak bearish. So like if it's like a bearish, it'll be a little bit more bearish, or if it's bullish, that kind of reduces the bullishness of the move. So I use that to my new analysis right now. So if you look.
Yeah, the Catalyst Impact. I mean, I'm about to do a video on it. and as well as all the other vol hacks. But the catalyst impact is based on, if you see this, when you look at this chart, you see that there's a lot more pressure, a lot more like negative Vanna pressure on the weekly and on the 0 to 30-day expiration, and also on the all expiration. So that's what that's based on. It's kind of like a balance between Vanna and like a breakout kind of thing. And it's weak bearish because if Meta does have positive earnings and it goes past what's that first big negative strike there? Is that 200 or something?
700.
700. Yeah, I can't even say. I don't. It shows you how much I pay attention to individual equities. If it does pass 700, then it could make a run, gamma run. But that's why it's weak bearish. But yeah, that's. I mean, there's a very mathy way that we do it, but that's essentially what that means.
Yeah, so that's why for my analysis, the dealer position looks a little bullish with a lot of support underneath with all these green bars. So for me, I think the play is like you said, Jason. Like if it goes past 700, it can break out like a long gamma play. But if you're bearish, I would actually might even short gamma that on the 700 line or a little bit above. So
yeah, no, that's a good play. When I look at this, I see range bound unless we go above 700. So essentially what you said. Cool.
So
all right,
next
Anybody?
one, or are we just?
Yeah, no, let's move along. We're at 9 o'clock, so we got 3 more here.
All right, let's do Microsoft then.
All right.
So for Microsoft, the implied volatility is 32.5. The interesting thing is the implied move is above average, which is 4.7 compared to 4.5.
Mm-hmm.
And its revision is 1, and the EPS is a little higher. So to me, it doesn't show like that people are expecting much. And if you look at a trend from previously, it's like still like there's no pattern trend. It's like constantly not going down or constantly going up. So for me, I feel like I'm a little neutral on Microsoft. And the range is about 444 to 47.
Yeah, kind of like Facebook, when we looked at it and we said the expected range was 6, but the bars over there look so much smaller. You have to look at that y-axis on that implied versus actual earning move. But yeah, it seems like I always thought Microsoft was usually pretty muted after earnings. It looks like it exceeds the range like 4 out of the last five quarters.
Yeah, it seems like it's close to the range, like doesn't break it out, but most of the time it's in range, if you can see it.
Cool. What does Volland say?
Sure.
Look at that grouping feature.
It's very useful. So for Microsoft, it shows a strong bearish bias. And also it's like there's not much hedging to me. Like there's a big positive Vanna at 4060 and there's a negative Vanna at 480. So there's kind of a 2 plays I feel like you can do. Like if you really believe the fundamentals that no one's expecting much, a fly could be done between the wings around 480 and a little bit lower, maybe 440, because 460 is in range. Or if you think it's going to be bearish because of the catalyst impact, if it goes past 460, you can do a long gamma play. What do you think, Jason?
No, I agree with that. I was about to say maybe like a butterfly with a long put. That's exactly what I would, like a deep out of the money long put. I agree with that 100%.
Yeah, because if you saw Meta, you saw a lot of red bars on one side or left side. That chain shows like breakout potential, but you see how it's like kind of like sparse.
Yeah.
Even the all expiration is like it shows this thing over here. So.
Yeah, there's not a lot of hedging over there either. So I mean, if Microsoft does tank, I mean, people are going to have to hedge like quickly. So.
Yeah, because this is one of the few times that ORATS and Volland's in line with their with the analysis, so that's why.
Yeah, it's might be a good play right there.
Shall we move to next one?
Yeah, go ahead.
All right.
Dark Matter, you putting on positions now?
I'm getting ready. I'm so if I'm quiet on that one is because I was trying to get myself ready for the opening session. That's what us intraday traders do, right?
And I always see you looking around, and then when you look outside, that's always my favorite.
Yeah. Well, I have this monitor over here, just
I know.
FYI. It's a monitor for those who don't know of all my stocks here. So I'm not looking into the abyss, I promise you.
All right. What do we got for Tesla?
So for Tesla, the implied volatility is 46.2. The implied move is 5.2 with an average of 7.6, which I'm very surprised that's under the average. So people are not expecting much for Tesla's movement compared to that. But you know that based on the history, Tesla tends to break out more often than being range bound.
Mm-hmm.
And
Yeah.
I
I'm
wonder
shocked.
is some of that just to do with like, hey, we already know their sales suck. You know, like what do you think some of that volatility is compressed because of that, Andrew, or what do you think?
I'm not really sure. I mean, usually it's like Tesla is so random and there's so much like people like obsessed with following it, like co-following with it, and the retail too. So it's like usually most of the time it's just hard to predict to me.
Yeah. Tesla, even like on a normal day, it sometimes just completely deviates from the Volland thing. I mean, it usually respects like levels, but if it's positive in, all of a sudden you're like, rug pulls, and you're like, what just happened? And it's like some collateral thing, or it comes out later. Elon had to sell like a bunch of shares to cover some debts or something like that. I'm like,
yeah, and not to mention that Elon likes to manipulate it too, so he can tweet or make anything and make changes.
Yeah.
So,
but it is strange. I think the part of the thing too is because FOMC is this week, and Microsoft. I think it's just Apple is on Thursday, but the other three that we just did is all on Wednesday. I think that skews the expected move number a little bit because it's trying to. It's not like additive. I don't think like dealers don't price it. It's like, okay, FOMC would cause this much and then this much for earnings. We'll just add those two together and make a range. So I don't think that's what happens. So I think that's kind of skewing some of these numbers, like as far as expected move goes.
Yeah, that makes sense.
Mm-hmm.
So like the EPS is only increased by 3 cents and the revisions are like balance. So it gives me a feeling that people don't really know what to expect from Tesla from this thing. So.
As usual, stay the hell away from it if you don't know.
Actually, we'll go look at Volland for a minute, but then I'll give my recommendation when you don't know what the hell.
And the range is about 425 to 472.
Okay.
Well, and I think while he pulls up Volland for this, I think the hard thing that's tough with this stock is like their future earnings path, right? The robo-taxi, the robot itself, the just full self-driving mode and the subscriptions for that, like it keeps just getting pushed, right? So as like an investor, it's hard for me to even like, are we waiting 20 years, 5 years, or 2 years? Like you just don't know the path anymore.
Yeah. All right. What does Volland say, Ingram?
All right.
Woo! Oh,
yeah. The thing that surprised me is strongly bullish bias, and you see all these red Vanna.
Yeah.
So it's like it can break out to the upside. But what I'm very concerned is that there's like very light support. Like over here, it's only from 120 to like 135, and then there's this negative and then up. So like for me, it's like you can do a long gamut play at 460, or you can do 440 if you're bearish. But with Tesla, I'm not very like like it's always unpredictable. I also can also suggest doing a long straddle or a long strangle too, if you're
Mhm.
not sure which direction.
Yeah, that's exactly what I was actually going to say that before when you said nobody really knows what's going to happen. The range is pretty narrow. You have FOMC plus Tesla, a long strangle or a long straddle. That's exactly what the recommendation I was going to give before when I said I'll let you go through Volland first. So good on you, man. Look at that.
See, we're in sync, I guess.
Yeah, no, we were in sync on this one.
Yeah, because one thing that gave me a clue is when you look at ORATS, the implied move is lesser than what's average.
Yeah.
So it kind of supports that actually the best risk reward play is actually longer gamma for it because of
Yeah.
that.
But we don't know the direction. So
Yes.
buy it. And it'll probably be expensive if you buy a straddle or something.
Yeah.
So. But yeah, no, that's exactly what I was going to recommend. And I was like, so excellent. All right, we got one left, right? Apple.
Yep. Apple.
If anybody, by the way, while he brings us up, if you have earnings that you want to see, put them in the comments. I will get to them in my Substack. So, all right.
Okay. So now on to Apple. So Apple's implied volatility is 28.6. The implied move is 3.8, which is surprising. Is actually the average amount. Is exactly the average. The EPS is a little higher though, which is about which is about $1 extra or something.
Yeah.
And the revisions are positive.
Yeah. What's up with that?
Is some of that? This is the quarter the new iPhone sales are mainly in this bucket, right? So that's my assumption is you're probably gonna have a pretty good earnings, at least from the iPhone, product line, right? Is because of that refresh. So that might be it.
Yeah, it seems to happen every every year. It's like an annual bump in earnings too. So I guess this is just that annual bump in earnings, but a little higher.
Yeah, but if you notice the trends, the past few earnings were all bearish, which is surprising. So
Yeah.
in my experience of trading earnings is that, these trends don't continually be bearish for a long time. Like usually 3 times it goes back to bullish or something. So I'm curious, do you think it will reverse to be a bullish earnings report or not because of this?
Yeah.
Continuous. And the range is about 238 to 257. And it's usually tend to be in range Apple instead of breaking out.
Yeah, we just made this comment about possibly FOMC skewing everything, and we see Apple being almost like you could say a normal range here based on its history.
Mm-hmm.
I guess it does have Thursday earnings as opposed to Wednesday, but that doesn't matter because, well, wait a minute. Did the Monday, Wednesday, Friday things that starts this week, right?
Oh, you mean the NASDAQ increasing durations?
Expirations?
Yeah, this week it starts.
I gotta see if that's actually going when you're checking out Volland. The other thing too is it looks like Apple's becoming kind of a grandpa stock. It's no longer right. It's no longer like that volatile on earnings.
You can even tell. Look at the IV; it's even lower than Microsoft.
Yeah,
so
which is kind of that grandpa stock.
But also they've done so many buybacks, right? Like that floor, the company itself is holding so much of that floor on top of that. So that I always think there's less volatility because you just have you have better than dealer support in certain instances.
I'm looking now at the expirations. Apple has a Friday expiration. Starting next week, it has Monday, Wednesday, Friday. So.
Oh, does that apply for all the other earnings stocks?
Yeah. Let me see. Let me confirm that real quick.
Oh man, this could be some fun 0D. I might have to get into some individual tickers here.
This is true for Meta. Meta has Friday this week, but then next week starts Monday, Wednesday, Friday. So yeah, this is true. This is true across all of them.
Wow.
I always think, the one problem that was always brought up about having 0 DTE on individual stocks is they could be played now. Like, earnings, if you have like a beat on earnings, then you can exercise your options really fast, right? And and leave somebody kind of in the lurch. I don't know how they fix that. I've got to look that up, because that had to be addressed before, because there'll be major liquidity flows for earnings, right? If like Apple, or yeah, I guess not Apple, but Microsoft, Tesla, and whatever the other one we did. But when those three happen, Meta, when those three like happen, that's Wednesday after market. Like, are they going to be forced to release their earnings after expiration is done?
Oh yeah, because you'd have to wait, 15 minutes after that market close. Yeah, that's interesting. I'm kind of now curious. You could have, what are you saying here? We're going to go for a 10,000x% zero DTE.
Yeah. Well, I mean, if you buy like the edges, if you buy the wings, and it's like, 2 delta, but 2 delta is only $10 away because of earnings, and they release earnings before expirate, like, settlement, and you can exercise like right before, right after the earnings go, like exercise the side that wins, right? Like
you're going to be doing so much winning, you won't even know what to do with it, Wiz.
Either that, or they figured something out. They'd had to have figured something out. Like I also don't want to get caught with I exercise, like, in the initial burst is bullish, and then I exercise and it reverses overnight. I'm like, no,
No.
I don't want that to happen. But but anyway, what does Volland say about Apple?
Sure.
I find it strange that everybody's buying calls on these stocks. Like everyone.
Yeah. It's a bit weird.
Yeah, same thing.
Same thing. Yeah. It doesn't look as crazy as the other earnings, but the catalyst is a strong bullish bias.
Yeah.
So, and there is some support, not as much as the other ones, but I feel like it's good to do bullish pay. So if it's like past 255, you can do low gamma. Or if you think you're bearish, it also could be like past 230, you can do long gamma plays bearish, but I'm leaning more bullish from this.
Yeah, I think what I would end up doing is that this looks like a great play for after earnings are released. Like, not before. Like Tesla, you could tell, one way or the other. But if it's a bearish Apple like move, it could go. But if it also breaks out, it could either go, or it could go to this like last negative Vanna and reverse. So bullish would be harder to play, even though there is a strong bullish bias on this. That's probably because there's a breakout. But that's just me looking at this. It also looks like it's on the verge of those breakout strikes. What was the dollar range for Apple? What was it, like 4% or something?
3.8 is on average.
Yeah, so 3.8% of what was it, 240 or something like that? What's the current price?
248.
240, so like 250. So
yeah, the range is like 238 to 257.
Times 4, so that's basically $10 either way, right?
Yep.
Yeah, this is also like a long gamma one. It could be.
Yeah, because it's like you said, it's actually on average. So it's like it's very hard to say if it's just best to play in a risk reward ratio to be long gamma or short gamma because it's on average.
Yeah,
and it tends to range bound. So like your idea does make sense. After earnings, you can play that.
Yeah. Great. All right. Well, it's 9:20. We have no additional questions. Thank you, Ingram, for coming on and showing us your earnings. I'll be releasing some earnings substacks this week before all the plays. But just remember, 3 of them are in the same day as FOMC. So it's going to be pretty tough. It's going to be pretty tough play. So anyway, everybody, thank you for watching, and may Volland help you in your future trading ventures.